Welcome to Pro News Flash. Bitcoin is gaining support from a rotation in the US stock market. Let's dive into the latest developments. Bitcoin has risen to a 5-week high amid rumors of a 10-day ceasefire in the Middle East and the approaching deadline for Congress to pass the Clarity Act, which would regulate the structure of the US crypto market. BTC is supported by capital inflows into ETFs, prompting fans of the digital asset to claim that it has bottomed out. By the 17th of July, specialized exchange-traded funds had attracted $75.7 million for the week, despite an outflow of $424.7 million at the start. Driven by the resurgence of conflict in the Middle East, Bitcoin is highly sensitive to geopolitical developments, as a rally in Brent crude could fuel U.S. inflation and force the Fed to tighten monetary policy. Higher interest rates would strain the crypto market's infrastructure, including increasing the cost of ETF services. Capital inflows into Bitcoin-focused ETFs have continued for the second consecutive week, after outflows in the previous 8 weeks. This may reflect investors shifting away from technology stocks amid growing concerns over whether massive AI investments will generate the returns markets have been expecting. At the same time, big tech is under pressure from competition from Chinese manufacturers. For instance, the Kimi K3 artificial intelligence model unveiled by Moonshot AI sent the Nasdaq tumbling, just as DeepSeek did in early 2025. The shift in capital between equities and cryptocurrencies is weakening Bitcoin's long-standing correlation with U.S. stock markets. For years, Bitcoin was seen as a high-risk asset, and recent tensions in the Middle East have reinforced that perception. Rather than acting as a traditional safe haven, Bitcoin has continued to trade like a risk asset. As a result, investors are paying closer attention to capital flows into Bitcoin ETFs as a gauge of the cryptocurrency's future direction. A Goldman Sachs study also indicates that money is flowing into the crypto market from big tech. The bank reports that hedge funds have been selling shares in U.S. technology companies at a record pace over 6 of the last 8 weeks. During this period, their positions have fallen by 10%. Stay tuned to Pro News for further updates on developments in the financial markets. Like, share, and subscribe.